Good afternoon, student. So today I'm going to teach the remaining part of chapter 5. So I'll go through all the problem 5.2, 5.3, 5.4 and 5.5 as well for today's class. So let's have a look. So last week I have told you how to prepare the problem 5.2. So let me go through the question again and then we can check the answer together. If you come across any difficulty, you can tell me during the class. So problem 5.2. First, the information given to you is the financial statement of the holding company and also the subsidiaries. It gives you the income statement and also the statement of changes in equity. And then for here, I have highlighted something that is the dividend from the subsidiaries and also the dividend declared, because these two amounts you will eliminate. And then the next one I will highlight, it is called profit after tax. So this profit after tax will be shared with the NCI. Oh, sorry, I forgot to share the screen. Sorry for that. So let me do it again. Thank you very much for your remind. So let's look at the screen now. So problem 5.2 here, first of all, it gives you the income statement. And from the income statement, we'll find the dividend income from the subsidiaries and also the dividend declared by the subsidiaries. Second figures, we need to highlight, remember, this is called profit after tax. We'll share the profit after tax from the subsidiaries and then share this to the NCI. And then we have the retained earnings. This retained earning, we will have it, and then we will calculate the post-acquisition retained profit and then share back to the NCI. They give you the statement of financial position. You can find the purchase consideration, that is 415,000. And from the additional information, first, it lets you know about the acquisition date. So the acquisition date is 1st of January 2000. And then I will write it down, 2000, 2001 is the prior years, and then 2002 is the current year. From the information, you can see that the share capitals and also the retained earning and also the total shareholders' equity. So the total shareholders' equity also equal to the net asset. That means it is the book value as at acquisition date. Purchase consideration and also the percentage of ownership. So here, remember, you can write down the shareholders' equity at acquisition day actually is equal to total net asset. It is also equal to the book value. That is all the book value of the companies, right? So it should be the book value. And then it tells you that the fair value is close to the book value. That means even though they do not give you further information, you know that book value is similar to the fair value. So there is no fair value difference. Remember, this shareholders at acquisition day, it means it equals to total net asset. That means it is in book value at acquisition day. Additional information, it also gives you the fair value of the NCI and also the goodwill impairment. So for goodwill impairment, we have some impairment in the previous 2 years and then an impairment in current years. Therefore, we can find this. I have write it down for you to do the CJE number 2. And then there is a intercompany sales. The intercompany sales, it is a downstream sales. And for downstream sales, the selling price is 100,000. And then it say that profit on intercompany sales include in operative inventory. That means in the subsidiaries inventory, all the goods have not yet been sold. Therefore, the profit element is 30,000. So here, that is the 3 consolidated journal entry. And then the other 3 consolidated journal entry will be related to the NCI, and then we will talk about it one by one. So first of all, it asks you to prepare the consolidation adjustment. And then the first one, usually we will calculate the goodwill. So can I have your goodwill figure before I give you the answer for you to check? What is the amount of goodwill for this problem 5.2? What is the amount of goodwill? You are able to calculate. Remember, I have asked you to do this question yourself last week. So what is the amount of goodwill for this problem 5.2? What is the amount of goodwill? Okay, thank you very much. It should be correct. So the goodwill is 142,500. So let's check whether you are able to get this amount and then same with me also. So thank you for your reply. So here we can find from the question that the purchase consideration, we have the fair value of the NCI, and then from the questions, it say that the book value is equal to the fair value. There is no fair value difference. Therefore, the goodwill calculate will be 142,500. So you can check with your figures. With this information, we will prepare CJE number 1. So for CJE number 1 here, we will call it elimination of investment in the subsidiaries at 1st of January 2000. This is the acquisition day. And then it required again in 2002, that is re and add. So we will debit share capital, debit opening retained earnings, and then we will credit investment in Opera Limited, that is the purchase consideration, and also the NCI, and then the remaining will be the goodwill. So for this case, it is easier because there is no fair value difference. When there is no fair value difference, and then we do not need to handle this part. So usually CJE number 1, you know that it is to eliminate the investment in the subsidiaries. And then CJE number 2 usually will be the goodwill impairment and also the fair value difference. Therefore, in this case, you do not have fair value difference. We just need to focus on the goodwill. And from the questions, we know that the goodwill has been impaired during this year and last year as well. So the second journal entry, we will call it past and present impairment of goodwill. The past, it represents 2000 and 2001, and present, it implied that 2002. So for current year, 2002, the amount is 40,000. Therefore, we will debit impairment of goodwill, and then here, you have choice. You can credit accumulated impairment or directly credit goodwill. Because in the statement of financial position, if the original worksheet do not give you the accumulated impairment, you can include the amount into the goodwill by credit the goodwill. 咁正式嚟講咧，我哋應該 debit goodwill impairment credit accumulated impairment 嘅。咁但係當你寫個 entry 嘅時候咧，無論你寫 goodwill 或者寫goodwill impairment accumulated impairment 咧，都會俾分你嘅。因為喺個 consolidation worksheet 上邊咧 ，goodwill 只要出個 net 數就已經可以啦，你唔使分兩行，一行叫 goodwill，一行叫做 accumulated impairment。Instead 你只係 create 一行叫 goodwill， 然後喺 goodwill 嘅同一行上邊咧個 consol adjustment 度咧處理翻就已經可以㗎啦。咁所以咧兩種做法都得，你寫 goodwill 又得，你寫 accumulated impairment 對佢亦都可以。而喺個 consolidation worksheet 上邊咧，你淨係 show 翻喺 goodwill 嗰行就得㗎啦。Okay, so in fact, it should be the account name should be accumulated impairment. But for consolidation, to make it simple, we usually will show the net figures. So you just write goodwill will be accepted. So for the goodwill, you will write off current year 40,000. You will also write off last year, that is 50,000. And this 50,000 in last year, we will debit goodwill impairment. And in current year, you're no longer able to debit goodwill impairment. Therefore, what you can do is to debit opening retained earnings and also debit NCI. And share between them will be 80% versus 20%. So this will be CJE number 2. So please have a look and see if you can do it correctly or not. So after this, when you finish the goodwill and then finish all the fair value adjustment here, and then CJE3 will be some of the additional information. And here, the additional information, it involved the intercompany sales during the year. So for the intercompany sales, it happened in current year. Since it is happened in current year, when you refer to chapter 5, slide 33, that is in current year. So what you need to do is, now it is in current year, what should we do is to debit sales, credit cost of sales, and credit inventory, because it happened in current year. And for the inventory, it is unsold percentage times unrealized profit. For the sales, that is the sales amount. And then for the cost of goods sold, it is usually the remaining figures, So let's have a look on how to do that. Go back to the questions. During the year, intercompany sales is 100,000, and then all the inventory is still in the inventory. That means 100% is still in the inventory. Therefore, the CJE number 3 will be debit sales, the selling price, credit inventory, unsold percentage times the unrealized profit. And then the cost of goods sold will be the remaining figures. But since this case, 100% have not yet sold, therefore the sales is full amount and also the cost of goods sold is given in the questions. So this is according to what we have learned in slide 33, and this adjustment is called adjustment of unrealized profit during the year and also unrealized profit in the inventory. Okay, and you remember that this is a downstream transfer, downstream sales. Since it is downstream sales, therefore, when you debit sales and credit cost of goods sold, this represents debit sales of the holding company and credit cost of goods sold of the holding company. It will not affect the subsidiaries. Once it will not affect the subsidiaries, it will also do not affect the sharing of the NCI. So this is CJE number 3. See if you have any questions on that, and then compare the answer with yours. See whether it is correct or not. So without any further information, the next 3 journal entry will be CJE 4, 5, 6. So this CJE 4, 5, and 6, that is those we have learned in chapter 4, slide 40, 41, and 42. It is related to share of post-acquisition retained earning, share of current year profit, and also elimination of the dividend. So let's have a look for the coming 3 journal entry. So journal entry number 4. What we need to do is NCI share of change in post-acquisition retained earning to the beginning of the year. So you can refer this entry to chapter 4 and slide 40. And here, what should you do is debit opening retained and then credit NCI. So remove the opening retained earning from the group and then share some to the NCI. So this figure is actually 2,000 and 10,000. It is the opening retained profit for current year, and this is at acquisition. So go back to the questions. 210, you can find it from the income statement, that is beginning of the retained profit for current year. And then the other figure, it should be the retained earning at acquisition day. And then the difference that represent 2001 and also 2000's profit. And this is previous year's profit, we need to share to the NCI. And then CJE number 4, it is elimination of the dividend declare. So these 2 items, you can find it from the income statement. For dividend income, you can find it in the holding company's income statement. For the dividend declare, you can find it in the income statement of the subsidiaries. And then 20% belongs, when the company declare, 20% belongs to the NCI. Again, we have learned this technique in chapter 4, slide 42. Therefore, the entry is debit NCI, and then debit dividend income and credit dividend declare. This is called elimination of dividend declare. So remember, when you write the entry, debit some account, credit some account, remember you need to use full name instead of abbreviation. If you just write NCI, we will not give you full mark. You need to write non-controlling interest for the account name. However, for the explanation, just like here, NCI, you can use abbreviation. Retained earnings, you can use abbreviation, but you cannot use this abbreviation when you write the accounting name. Okay? Accounting name 記得一定要寫全寫，如果寫簡寫咧，會攞唔足分嘅。但係嗰啲解釋咧，撇除係個 account name 咧，咁其他都可以咁做嘅。Okay, so this should be the CJE 4 and CJE 5. Finally, we will prepare the CJE 6. Can I have the figures of CJE 6? What is the amount of profit share to NCI for current year's profit? CJE 6你會 share 幾多 current year 嘅 profit 俾 NCI 咧？ Okay, can I have your amount? What will be the CJE number 6 when you share current year profit to them? What figures are you able to calculate? Can I have your figures? Anyone? Can I have your CJE number 6? How much amount of profit shared to the NCI per this question? NCI share of current year's profit is how much? What is the amount of current year profits after tax you are able to calculate to share to NCI? So think about from CJE 1 to 5, which entry will hit the profits of the subsidiaries, and then you do some adjustment. After you've done the adjustment, you will have the adjusted profit, and then use this adjusted profit to share 20% to the NCI. Then what will be your amount? Have you calculated that? Okay, let me check. Yes, $16,960. It should be correct. Thank you very much for your help. So at least I know that you should have done that before you come to the class, because I have asked you to do that before, right? So let's have a check on that. So remember, CJE4 and CJE5, usually there is no entry that will hit the P&L of the subsidiaries. Remember, this is just the elimination. And then for CJE number 1, it usually to help you to calculate the goodwill and also eliminate the investment in the subsidiaries. Therefore, we will not have any account that will hit the P&L of the subsidiaries. And for CJE number 2 and CJE number 3, so CJE number 2, this is the impairment of goodwill. This impairment arises when we prepare the consolidation. Therefore, the NCI also need to share the 20%. So here, this entry will affect the sharing of profit to NCI. For CJE number 3, because it is a downstream sales, this sales and cost of goods sold only appear in the piece account. You will adjust piece account, but not subsidiaries. So this entry will not affect the profit of the subsidiaries. Finally, you only have CJE2 need to be adjusted. So let's have a look for the answer. So for CJE number 6, what should we do is we originally got the profit after tax from the subsidiaries. The amount is here. And then we need to minus the goodwill impairment, CJE number 2. Finally, this is the adjusted profit. Based on the adjusted profit, we share 20% to the NCI. So finally, the entry will be debit income to NCI and then credit non-controlling interest. Okay? Here, it missed a word here. Debit income statement. Income to NCI and then credit NCI. So you can get this amount. Okay, so any questions on this problem 5.2? Because this is not that difficult. The only new things you come across is CJE number 3 that related to current year's intercompany sales. Okay, so please see if you have any questions. If no, we will move to second question, that is problem 5.3. And problem 5.3 is the most difficult one for today. So any questions on this problem 5.2? So if no, let's continue. Let's continue. Okay, 5.3, a little bit difficult. So can I give you 2 minutes? 2 minutes. Just read about the first box here. Just read about this information and then get some idea first before I continue. Okay, so 2 minutes from now for you to read the first box here. That is about the problem 5.3. Okay, so 2 minutes for you to read from present company until the last sentence. Investment in these subsidiaries was carried at cost. So please read all this information. 2 minutes for you to read it, and then I will discuss in details. When you try to read it, think about what does it mean. Okay, so are you ready? Let me read the information together with you and see whether you can think about what does it mean or not. So here, there are 4 paragraphs. Let's read it one by one. So the first paragraph is say that Prism Company acquired 80% of the stock of the subsidiaries company for 300,000 on 1st of January 2007. So just for this first sentence, it gives you 3 information. First information, the holding company acquired 80% of the subsidiaries. Second, they give you the purchase considerations. Thirdly, they also provide you the acquisition date. And then when you move on to see the income statement, they give you the income statement for 2009 at the year-end date. Therefore, immediately I write it down for 2007, 2008 prior years. It should be the prior years. For 2009, it should be current year. So you can write down all this information first. So the first paragraph is easy. It just gives you the basic information you have come across before. Secondly, let's read about the second paragraph. At acquisition date, the subsidiaries report that their retained earning is 150,000. This is at acquisition date. Retained earning is 150,000. So usually we need to find out the book value. Book value is total equity at acquisition date. Total equity equal to total net asset. Therefore, if you have total equity, actually you have the book value of the total net asset at acquisition date. So in this question, it gives you about the retained earning. It is 115,000. How about the share capital? Because retained earning together with the share capital, you are able to find out the total equity. And total equity, that means the total net asset, and it also that is the amount of book value, as I mentioned to you before. So remember, total equity actually equal to total net asset, and it also represents that the book value of the company at acquisition date. So usually the company will tell you that whether there is any new issue of share after you purchase the subsidiaries or not. If you read through all the information, you cannot see that the subsidiaries during the year has new share issue, then we will assume that the share capital here, it represents the share at the beginning of the year and also at acquisition date. 咁正常咧，題目就會話俾你聽咧，當母公司收購咗子公司翻嚟之後咧，子公司有冇 new issue of shares？ 如果冇嘅話咧，其實你喺個 statement of financial position 入邊見到個 share capital 呢個數咧，即係等於當日收購嘅時候嘅 share capital. So if they do not mention any new issue share, that means share capital at acquisition date is same as now, that is 200,000. Therefore, from the statement of financial position, you'll find out the share capital now and plus the retained earning at acquisition date. It equals to total equity. That total equity, that it is 350,000. It also means that this is the total net assets at book value. Total net assets at book value, I will say that. Okay, so with this information, it is easier when you prepare the first consolidated journal entry to find out the goodwill. So this second paragraph, it gives you the idea on when they give you the retained earning, you need to find out the total equity as well as those total net asset at book value. And in this case, since there is no indication that there are a new issue of shares of the subsidiaries after the acquisition, we will find this amount from the statement of financial position. That is 200,000. Okay, any questions for this paragraph 2? It is not that difficult for 1 and 2, but there is some implication. You need to find it out. Okay, third paragraph, that is start the more complicated one. So it says that the excess of 2 figures, you are comparing 2 figures, and then you find out the difference. The 2 figure is first, the acquisition cost. The acquisition cost is 300,000. Second, the book value. The book value of the subsidiaries. So the book value of the subsidiaries is 350,000. Therefore, the third paragraph, you need to compare the figures in first paragraph and also the figures in second paragraph. When you find out these 2 figures, actually, you find that there is a difference between that. Remember, this 350,000 is the whole amount, while the holding company only purchased 80%. Therefore, this 300,000 350,000 is based on 80%. And this 350,000, when you make a comparison, you also need to base on 80%. So 315,000, 80%, and 300,000, the difference, you calculate the difference. The difference represents the amount assigned to buildings and equipment. What does it mean? It means that there is a fair value difference, and you need to find out the fair value difference yourself. The fair value difference, how to find it out? You need to compare two figures. The first figure is acquisition cost, that is 300,000 for 80%. The second figures is book value. The total book value is 315,000, but you only own 80%. So you need to find out 80% and then compare it with the 300,000. And then the excess figures, it represents the change of fair value of the building and equipment that represent fair value difference. So you need to calculate it yourself. So I leave it for you to do later. And then after you find out the fair value difference, it tells you that the fair value difference told you the building and equipment has remaining useful life for 10 years. So remember in chapter 3, we have teach you when we calculate the depreciation in individual company, the subsidiaries were based on book value to calculate depreciation on building and equipment. However, from the angle of the group, you need to calculate the depreciation based on the fair value. Therefore, there is a difference, and then we need to make up those difference by increase the depreciation, by debit depreciation and accumulated depreciation to make the depreciation based on the fair value rather than the book value. So this third paragraph, it gives you the information about fair value difference and also excess depreciation we need to perform. Okay, finally, the last paragraph, it tells you that the purchase consideration paid by the holding company was proportionate to its share of fair value. What does it mean? That means you are paying 300,000 to buy 80%. How about the 20%? The 20% represent the fair value of the NCI. If it say that it is proportional to the share, that means there is no control premium. There is no control premium. Remember, we have learned this in chapter 4. When there is control premium, then the share of goodwill will be different. When there is no control premium, it is easier for you to do so. That means if you know that 80% is 300,000, then what is the amount of 20%? So in this case, they do not give you the fair value of NCI. Instead, they give you a sentence that was proportionally shared. Once it is proportionally shared, it means no control premium. No control premium, that you are able to calculate the NCI's fair value based on 80%, 300,000. How about 20%? You need to calculate it correctly. Therefore, it means there is no control premium. When no control premium, you are able to calculate the NCI at fair value yourself, even though they do not give it to you. So in this case, they do not give you the NCI at fair value. You need to calculate itself because they told you there is no control premium. Okay, understand this 4 paragraph. This 4 paragraph looks complicated, but once you read it carefully, you actually know that they are giving you some information, but you need to duck the information out from the paragraph. Okay, any questions just for this 4 paragraph you don't understand? So you need to do some calculation. We do not know whether there is goodwill or not. You need to use the figures and then do some calculation. After that, you are able to find it out whether it actually have the goodwill or not. Because next step, I will leave it for you to do. You need to calculate whether there is goodwill or no goodwill, or how much is the amount of goodwill. And then I left it for you to do, and I will give you the answer later. So for the information, you now know that this information gives you about the fair value difference. This information gives you about the NCI at fair value is how much. Okay, understand that, and then we move on. So it gives you the income statement. For the income statement, we will highlight the dividend income and also dividend declare. We'll highlight the opening retained earning. And also remember, this is called profit retained. Sometimes it is called profit after tax. But our target, you always remember, we need to have the profit after tax. So you need to bear in mind. Otherwise, you will wrongly use other figures because the presentation for every income statement will be a little bit different for the questions. Remember, when we find the profit to share with the NCI, we need to find out the profit after tax. You need to read it carefully. It should be profit after tax. And then it gives you about the statement of financial position. The statement of financial position, it gives you the purchase consideration, same as it is given in the first line of the paragraph. And as I mentioned, if there is no additional information that mention about that after acquisition, the share capital of the subsidiaries increase, then the subsidiaries share capital as at acquisition day is the same as now. If no further information provide you that, so you need to bear in mind on this information. Okay, finally, they give you some information about the intercompany transaction. So let's have a look for this box, this paragraph. So there are two upstream sales. Let me read it one by one. On 1st of January 2009, that means at the beginning of current year, the holding company has some inventory, and this inventory is purchased from the subsidiaries company during 2008. That means during last year. And then the selling price is 15,000, while the cost of goods sold is 10,000. And then I will immediately write it down. It is a upstream sales because the holding company hold the inventory. That means they purchase from the subsidiaries. Therefore, it is a upstream sales. And this upstream sales happened in last year because now it's 2009. So it happened in 2008. It happened in last year. And then there is a unrealized profit. So original selling price is 15,000. Now the cost of goods sold is 10,000. When you do some calculation here, that 5,000 represent unrealized profit. So this happened in 2008. I will write it down CJE number 3. So in 2008, that means last year, in 2008, the company will go through this entry for console adjustment. They will debit sales, credit cost of sale, credit inventory. But now it is 2009, it is next year, right? Next year, you need to determine whether it is being sold out to the third party or still not yet sold. And then it depends on which entry you are going to do for that. And remember, this is upstream sales. So you cannot just debit opening retained earning. You should also debit non-controlling interest. If it is unsold, you need to credit inventory, the same amount. If it is being sold, you need to debit opening retained, debit NCI, and then credit cost of goods sold. Okay, so think about current year, which entry you are going to do. And then when we continue, read the question, let's look at second paragraph. And then it say that the holding company sold the inventory on hand at the beginning. Or inventory on hand at the beginning, that means at 2009, 1st of January, they find that there is inventory and then they sell this inventory immediately at the beginning. Therefore, this 5,000 is unrealized profit in last year, but in 2009, it become realized. So you need to go through a entry to show that this amount is being sold to outside third party. So you need to do for that. Okay, just a moment. Okay, sorry for that. So here we have the inventory being sold. Therefore, when the inventory is being sold, we need to follow this entry by debit opening, retain, debit NCI, and then credit cost of goods sold. So how much is being sold? It say that all the inventory on hand is being sold. Okay, so you need to think about how to do that. And then another upstream sales. During 2009, the subsidiaries has sold another goods 40,000 that cost 40,000 to the holding company at 60,000. So in this case, I will also write it down. It is a upstream sales in current year. So this upstream sales in current years, and then the unrealized profit is 20,000. So now it is current year. So you need to go back to here. Think about from the angle. Now is current year, and then you need to go through this entry. And part is you need to know how much is being sold and how much is remaining. And in the paragraph here, it say that Prism sold the inventory and hand at the beginning of the year, but continue to hold 40% of its purchase in 2009. Therefore, the purchase in 2009, they still have hold 40%. That means 60% is already sold. You can recognize the profit, while 40% is still in the inventory. You cannot recognize this profit. You need to recognize it as the unrealized profit. So here has two upstream sales. One happened in last year, but now realized. And then one happened in current year, but only 6%, 60% is realized, and then the other 40% have not yet been realized. So I write it down CJE 3 and 4 for you to do that. And then we have another 3 console journal entry, 5, 6, and 7. So for 5, 6, and 7, it is the sharing of NCI. So we'll let you know later. Okay, now I will give you 5 minutes what I need you to do. First of all, calculate the amount of goodwill. Second, prepare the console journal entry number 1. Okay, so 2 tasks for you in 5 minutes. Prepare the, calculate the goodwill, prepare CJE number 1, and then we will check the answer together in 5 minutes. Okay, have you finished? Can I have your amount of goodwill? If you have calculated, can you let me know your amount of goodwill? So if you have calculated, please let me have your figures, because I would like to compare the figures you've given it to me. So whatever figure you are able to calculate, just let me know, because actually I will not score any marks on that, but I just want to know how you think about the goodwill. So why you have two figures? Which figures is you think that it is correct? Whether it is 75,000 or 0, you need to give it to me. Based on your understanding, based on your calculation, what is the amount of goodwill? How about the others? Can you calculate the amount of goodwill? Can I have your figures too? Don't be shy. Any figures you calculate, just let me know. And then I can understand why you have these figures. Anyone would like to share your goodwill as well? Okay, thank you very much. How about others? We have 0, we have 25,000. What else? So usually goodwill is not that difficult to calculate. In previous example, or even when we first learned in chapter 4, you are able to calculate the goodwill very easily, because we already follow the different you have already followed the format I teach you, and then you can find out the figures. 75. Okay. So what is the amount of goodwill? How about the others? We have two figures. One is 0. One is 25,000. Any more figures you are able to calculate for this goodwill? Because we know that goodwill is the purchase considerations plus fair value of the NCI, and then we minus the fair value of the identified net assets, and then we have the goodwill. Do you have any more figures you want to share with me? How about others? Have you calculated? Even your figures is not 25,000 or is not 0, you can just show me. Just let me know more figures. 5,000 and then no goodwill. Okay, very good. The amount is 0. Goodwill should be 0. If you are able to calculate 0, what does it mean? It means that you fully understand what the first, second, third, and fourth paragraph of the questions, because as I just mentioned, this question is quite complicated, because it is not just as usual they give you all the information. First of all, you need to find out the fair value difference yourself. Second, you need to find out the NCI yourself. Therefore, you will find that not all the figures is already there. You need to do some calculation. And then finally, goodwill is 0. Very good for those if you are really able to calculate it 0. But if you are not able to calculate, for example, 25,000, because you have mixed up something only, but you know most of that. So let me show you how to find out the goodwill is 0. Okay, are you ready? So first, we need to prepare the consolidation adjustment and also the adjusting entry. So for here, first of all, remember paragraph 2, it say that there is a fair value difference. So first of all, I need to calculate the fair value difference first. The fair value difference, how to calculate, according to the question, is excess of acquisition cost over the piece shares of the book value of the subsidiaries. So how much is the company pay acquisition cost? The acquisition cost is 300,000. How much is the book value? The book value originally is 200,000 of the share capital plus 150,000 of the share retained earning. That is the total equity. And out of this total equity, the holding company only owns 80%. So I'm willing to pay 300,000 to buy 80% of your company. The remaining, I will say that actually it is the fair value difference. It is the fair value difference, right? So here is the fair value difference. But don't forget that 300,000 is for 80%. And 2,000 is from the angle of 80%. However, when we calculate the consolidation, we need to have a figures that represent 100%. 記唔記得我哋揾 fair value difference 咧？唔係揾你 share 幾多嘛，我哋係要揾整體成個 fair value difference 係 increase 100% 嘅角度嚟睇係幾多。如果你用呢一條 formula 計出嚟嗰個咧，只係按照80% 嘅角度嚟睇咧，嗰個嘅 fair value difference 係2萬蚊，因為佢話我願意俾多嗰部分就等於你嘅 fair value difference， 而我願意俾多嗰部分係講緊買你80%，咁所以咧你一定要計翻 100% 嘅角度 fair value difference 係幾多。So always remember this is from the angle of 300,000 is for 80%, and this purchase of the net asset is only for 80%. Finally, this 20% increase in fair value only represent 80%, right? 80% minus 80% equal to something that is a relevant part of 80%. So for the fair value difference of the buildings and equipments, actually it should be 25,000. So 25,000 is the fair value difference. Therefore, if you want to find the fair value of the total equity, it should be 200,000 plus 150,000 and then plus 25,000. This represents the fair value of the net asset. And second item, what you need to find it out is the NCI. Remember, NCI is say that the holding company is buying on the same proportion. So purchase consideration is 300,000. 300,000 is for 80%. Then in the same proportion, how much is 20%? How much is 20%? Therefore, the fair value of NCI, since it say that there is no control premium or it say that it is on the proportionate, so it can give you the idea on whether it is no control premium or whether it is on the same proportion. Therefore, fair value of NCI, when you calculate it, it should be 300,000 divided by 80% and then times 20%. It's equals to 75,000. Therefore, the total amount is 375,000. And remember, the fair value of the net asset, if you use 20,000, then the amount will not be correct. If you use 20,000, you will not able to calculate, that is 0, right? So this is the book value. This is the fair value difference. Add it all together, 375,000 exactly is the fair value of the identified net asset. Finally, goodwill is 0. Goodwill is 0. Okay, understand that. Understand that how to calculate the goodwill that is 0. Do you have any questions regarding this? So I just tell you this question, it gives you 2 new challenge. First of all, you need to calculate the NCI of the fair value yourself because they just give you the idea on no control premium. Secondly, you need to find out the fair value difference yourself. See if you have any questions. Okay, so after you get all these figures, and then next, CJE number 1 is not that difficult. So for CJE number 1, you will debit share capital, and then debit retained profit, and credit investment, credit NCI. Remember, we do not have goodwill. Therefore, we will debit building and equipment. We will debit building and equipment. And then after you prepare the CJE number 1, what you need to do is to prepare CJE number 2. So CJE number 2 will be usually the goodwill impairment, if any. But for this case, there isn't any goodwill as well as there isn't any goodwill impairment. And then our second consolidated journal entry, what you need to focus is on the fair value difference of the building and equipment. Remind what you have learned in chapter 4. When we find that there is a building and equipment with fair value difference, we need to calculate how much depreciation is understated from the angle of the group, because the subsidiaries will base on the book value. That is the book value to prepare the depreciation, while the holding company actually from the angle of the group, they need to calculate the depreciation based on the fair value. Therefore, there will be a difference of 25,000. And for these questions, it have told you that the buildings and equipment still have 10 years to use, Therefore, we need to prepare CJE number 2. Remember, 2007, 2008 is last year's pirate years. There are 2 years in before, and 2009 is current year. Therefore, next journal entry, we need to calculate past and current depreciation on this undervalued building and equipment. 2007 and 2008, it should be 25,000 divided by 10 years times 2 years. And this allocate to the holding company as well as the NCI. For current year, we will debit depreciation, 25,000 divided by 10 years. Remember, 2008, 2007, we also need to debit depreciation. But until you come to 2009, you're no longer able to debit last year's depreciation. Instead, you need to debit opening retained earnings and also debit NCI. Finally, you can credit accumulated depreciation or you can credit building and equipment. So same rationale as the goodwill, because in the consolidation worksheet, you do not have a line called accumulated depreciation. Instead of credit accumulated depreciation, you can write credit building and equipment. And then in the statement of financial position, on the same line of building and equipment, you can credit. 咁同樣啦，頭先講過啦，你可以寫 credit accumulated depreciation 啦，咁呢個係最正統嘅做法啦。但係當你做 console worksheet 嘅時候咧，其實我哋係冇 accumulated depreciation 㗎，因為我哋出個 net 數，咁所以咧 instead of credit accumulated depreciation，你寫 credit building and equipment 咧都係 acceptable 嘅。咁兩樣嘢睇你自己啦。你如果跟翻 concept 就應該寫 accumulated depreciation，但係當你做 worksheet 嘅時候，你就記得咧唔需要自己 create 一行叫做 accumulated depreciation，將佢擺埋落去 building and equipment 嗰度 credit 就可以啦。Okay, so you can do it whether use the accumulated depreciation or building and equipment, but you just need to bear in mind when you prepare the consolidation worksheet, don't create a new item called accumulated depreciation. Just put it into the net figures of building and equipment. Okay, so this will be past and current depreciation. So past 2 years and also current this year. So please check CJE 1 and 2 whether you are able to do that or not. So I make it smaller, and then you can have CJE 1 and 2 read it together. Okay, see if you have any question. If you do not have any question, can I give you another 5 minutes for you to prepare CJE 3 and CJE 4? Remember, CJE 3 is purchased from last year and then in current year, or is being sold. CJE number 4 is purchased in current year. Only 60% is being sold. 40% is still remaining in the inventory. So think about how to do this entry by reference to slide 33. Okay, 5 minutes from now. CJE 3 and 4. Okay, so let's check the CJE number 3 together. So for CJE number 2, it is the upstream sales in last year and then during the year, it is all being sold. Therefore, the entry should be debit opening retained earnings, debit NCI, and then credit cost of sales because it is being sold. So let's have a look for the answer for CJE number 3. So for CJE number 3, it happened in current year. Before you think about that, actually, let me do a little revision for you. So in last year, when it happened in last year, the entry will be, it is year 2008 upstream sales. You will debit sales, credit cost of goods sold, credit inventory. So in last year, you will follow the entry here, debit sales, credit cost of goods sold, credit inventory, right? And inventory is unsold percentage, 100% is being unsold times the unrealized profit because the sales amount is 15,000 and the cost of goods sold is 10,000. So you will do this entry. And then later on in CJE number 3, that is in current year, because the inventory is all being sold in current year. So we need to follow the lower part, that is to credit the cost of goods sold. So you can think about that. During the year, when the holding company sell the inventory, they will credit inventory and then debit cost of goods sold. So they will use a higher amount to debit the cost of goods sold. Therefore, instead of credit inventory, because the goods is no longer stay in the inventory, it has moved to become the cost of goods sold. So the cost of goods sold is using a higher cost of goods sold. What we need to do is to reduce the cost of goods sold. Finally, the account will be credit cost of goods sold, and then we will debit opening retained earning, debit NCI. Remember this sales and cost of goods sold record by the company in last year. We are no longer able to debit last year's sales and also credit last year's cost of goods sold. Instead, we need to debit opening retained earning. And since this is the upstream sales, it will also affect the NCI. So finally, debit opening retained earning, debit NCI, and then credit cost of sales. So this is called realization of beginning unrealized profits. Originally, it is unrealized inventory or unrealized profits. Whatever you write, it will be correct. Now become realized because it is already sold to outside third party. So it's called realization of beginning inventory. Okay, any questions for this CJE number 3? And then we move on to see CJE number 4. So CJE number 4, it happened in current year. So what we need to do is based on this debit sales, credit cost of goods sold, credit inventory. So what we need to do is here, elimination of intercompany sales of inventory, same as slide 33. And then it is due in current year. So we will debit sales. The selling price is 60,000, and then we will credit inventory. Remember, credit inventory is unsold percentage times unrealized profit. Unsold percent, unrealized profit. Then we will credit inventory, and then cost of goods sold will be the remaining figures. So finally, for CJE number 4, we will debit sales, credit cost of sales, and also credit inventory. And inventory is unsold percentage times the unrealized profit. So see if you have any questions regarding this CJE 3 and 4. And then if no, I will give you another 5 minutes for you to prepare C3 entry. That is CJE 5 to CJE 7. Okay, so this 3 entry actually is all related to NCI. So CJE 5, what you need to do is to prepare the entry for the NCI share the change in the post-acquisition retained earnings of the beginning. This is the first I would like you to prepare. CJE number 6, elimination of dividend. CJE number 7, think about which entry will affect the profit and loss of the subsidiaries, and then what you need to do is to find it out and then prepare the entry and prepare the adjustment and then calculate the adjusted profit and then share to the NCI. Okay, so if no questions, next 5 minutes for you to prepare CJE 5, 6, 7 that relate to NCI. Okay, so let's check the CJE number 5. So CJE number 5, you are able to calculate because you know that about the retained earnings at the date of acquisitions. You also can read the information from the income statement, and then you can find the opening retained earning. So here from the income statement, you can know that the opening retained earnings is 300,000. So go back to the income statement, and then you can find that it should be 300,000 here. And then go back to the questions, and then you can find that at acquisition day. At acquisition day, it told you that the retained earning is 150,000, right? So based on this two information, you are able to calculate this CJE number 5. So let's check CJE 5. It should be debit opening retained earning for 30,000 and then credit NCI for 30,000. Please check whether you calculate it correctly. And then later on, for the elimination of the dividends, because it says that the dividend declared is 20,000. So out of this 20,000, 20% belongs to the NCI, and then the dividend income 16,000 belongs to the holdings. So this CJE 5 and CJE 6, you should know how to do that, right? So please check whether it is correct or not. Okay, and then I would like you to tell me your figures. For CJE number 7, we need to calculate the share of current year profit after tax. What is the amount you are able to calculate for the amount share to NCI? Can you let me have your figures? $21,900. Too much for that. Too much for that. Anyone have another figures that related to CJE number 7? NCI share of current year profits after tax, 21,900 is too much. 10,900, correct. Thank you very much for your help. So let's have a look on which entry we need to include in it. So you basically we will go back to have a look. CJE 5 and 6, nothing related to current year's profit. Go back to CJE number 1. So CJE number 1, it will not have any effect on the P&L because it is just re and add and also eliminating of the subsidiaries. And then CJE number 2, there will be debit depreciation. This depreciation is because of the building and equipment is stated at book value, while on consolidation we need to state it at fair value. Therefore, this depreciation will finally be reflected in the income statement of the subsidiaries. We need to do more depreciation. So this entry will affect. And then for here, there is a upstream transfer of inventory. So when upstream transfer of inventory, finally, the inventory is being sold. Therefore, we need to reduce the cost of goods sold for current year. When we make the sales, we need to reduce the profit, reduce the cost of goods sold, and then increase the profit. So we need to take care of this information. And then finally, for the current year sales, because it is some of them, 40% have not yet been sold. Therefore, we need to calculate this amount and include this amount to reduce the profit of the subsidiaries. Therefore, CJE 2, 3, and 4, we need to take into the consideration. So let's have a look for the adjustment here. So let's have a look. Originally, we got the profit after tax from the income statement. It is 60,000. And then previous year, there is unrealized profit because it has not yet been sold. Therefore, that unrealized profit, we cannot record it. And then now it is being sold to outside third party in current year. So therefore, we will record 5,000. And for the unrealized profit for current year, CY, that means current year, as the inventory not yet sold, therefore we cannot recognize the profit, and then the amount is 8,000. And finally, there is a depreciation on the undervalued building that will be CJE number 2. This is 2,500. So, and then the adjusted profit after tax will be 54,500. And then out of that, 20% belongs to the NCI. It is 10,900. So here you can see that I write slide 44. So let's go back to slide 44, what information it actually gives it to you. So on slide 24, it say that when there is inventory transfer in parent year, that means last year we have inventory transfer, but we have not yet sold it out. Now we sold it out, and then we will realize the profit for current year. Therefore, we need to add it back. So it is add back here. In this case, we are talking about the transfer of inventory happened in last year, and then those profits should not be recognized until it is sold to outside third party. So prior year's unrealized profit now being realized, it should be 5,000. And how about current year? If the inventory is transferred in current year, but you have not yet sold, for those unsold part, there is unrealized profit, and the unrealized profit you need to deduct. Therefore, in this case, during the year, we have unrealized profits and the inventory not yet sold. So for those not yet sold, it becomes unrealized profits, and then you need to minus it. So this is per what we have learned in slide 44 here. Finally, please check whether you get a correct answer on this CJE7 or not. Okay, see if you have any questions. If no, we will move to next question. It is much easier. For 5.3, let me conclude. Actually, this question is not that complicated, except for first, you need to calculate the fair value difference yourself. Second, because of no control premium and the amount is proportionate share, therefore you need to calculate the NCI at fair value. The NCI at fair value. Apart from these two difficult figures, you need to find it yourself. Unlike recent questions we provide you already, other parts actually related to transfer of inventory. It is not that difficult, but always bear in mind, when you think about the intercompany sales, think about that whether now is current year or whether now is the next year. Just follow the requirement in slide 33. Once you do more, you will know how to handle the transfer of inventory. Okay, any questions? If no, I would like to go through one more question first. That question is not difficult, it is easy, because problem 5.4 only have 3 console adjustments. It teaches you about how to handle the intercompany transfer of fixed asset while it is upstream and while it is downstream. Okay, are you ready? Shall we take out the problem 5.4? If you have no further question on this 5.3. Okay, let's continue. So 5.4, a short question, and then there are 2 requirements. The 2 requirements is one for upstream and one for downstream, so we'll do it first. So let's have a look for the question. Problem 5.4, intercompany transfer of fixed asset. First of all, it says that the parent company purchased an equipment on 1st of January 2001 for 200,000. So it buy the equipment. And then the estimated useful life will be 10 years with new residual value. So in the first paragraph, it gives you the details about the purchasing day, about the equipment cost, and also give you about the depreciation policy. Second paragraph, after use for several years, on 1st of July 2005, immediately when you compare 1st July 2005 with 1st of January 2001, it is 4.5 years. So after you use for 4.5 years, parent company decide to show the equipment to the subsidiaries for 120,000. So it no longer want to use it. Therefore, it sell it to its subsidiaries. So it is a downstream sales. It is a downstream sales. And here it gives you the information. Parent company has 90% of the ownership interest in the subsidiaries company. It owns 90%. So after the subsidiaries purchase the equipment from the holding company, the remaining useful life is become 7 years. Is 7 years. So net profit after tax of the subsidiaries, they do not give you the income statement. Instead, they just show you the figures. It is 500,000. And you can ignore the tax effect. So there are 2 requirements. Let's read it together. First of all, it asks you to show the consolidation adjustment for 2005 relating to the above transaction, while it is downstream sales. Second, if the situation have been reversed and now it's the subsidiaries sold the equipment to the parent company, assume that if it is the upstream sales, what will be the consolidated journal entry? So now, one question, same figures, ask you to prepare downstream and upstream. So now I would like to give you 5 minutes for you to prepare 2 parts for me. So how to prepare it? Let me give you some idea. Go to our PowerPoint slide on chapter 5, turn to slide 51. So first of all, can you please, like me here, calculate the profit on disposal? Calculate the unrealized profit on disposal. This is your first task. Secondly, after you calculate the unrealized profit per slide 51, go to slide 54. What you need to do is you need to prepare 2 CJE. One is CJE1, adjustment of the unrealized profit. Second, turn to slide 56. You need to correct the over depreciation. So I give you 5 minutes for you to prepare 3 things. First, based on 51 to calculate the unrealized profit. Second, based on 54 to prepare CJE number 1. And then thirdly, based on slide 56 to prepare the correct of over depreciation on the realized profit. Okay, so 5 minutes for you to prepare the task for me, and then we will check the answer later on, CJE 1 and 2, and also calculate the unrealized profit. Okay, so let's check it in 5 minutes. Okay, can I check the question together with you? First of all, can you tell me that what is the profit on disposal? What is the profit on sale of the fixed asset? Can you give me your figures? So for CJE number 1, we need to calculate how much is the profit earned from the sales of the equipment. So can I have your figures? So let me check the 2 figures before I give you the answer. What is the profit on sales you are able to calculate on this transfer of a fixed asset? $10,000. Very good. It is correct. It should be 10,000. Thank you very much. So correct. So how about the second figures? The second figure is a little bit tricky. So what is the amount of excess depreciation we need to reverse? Can I have the figures of excess depreciation? So CJE1 is to handle the unrealized profit, and then CJE2 is to handle the excess depreciation. So what is the amount of depreciation? When you compare the individual company, they will base on the transfer price to prepare the depreciation. However, from the angle of the group, we need to base on the we need to we will use the transfer we need to base on the original cost. Then there will be difference. Okay, 19,000. 19,000 is the excess depreciation. Is it true? It seems too big. Any others have other figures? What is the amount of excess depreciation? Remember, when you calculate excess depreciation, so according here, individual, they will use the transfer price divided by the remaining useful life. From the group angle, it should be net book value divided by the remaining useful life. And then for the shortcut, let me give you, you do not need to calculate 2 figures. Instead, you can use profit on sales divided by remaining useful life. So what will be the amount for this case? Any other figures you can suggest to me? Because you can see that the unrealized profit is just only 10,000. The excess depreciation should not be greater than the unrealized profit, right? So what is the amount of excess depreciation you're able to calculate? Any other figures? 1818. I know your answer. Why is 1818? You need to take care for that. So 714. Why it is minus? Why it is minus? Anyway, the figures is correct. It should be 714. So you are quite clear about how to handle it because it happened in the mid of the year. Okay, so let me give you the details. So some of the students are able to calculate the amount. So the excess depreciation should be just $714. Let me show you. So first of all, you need to calculate the details. So just like I have told you, you need to follow what I have done it in this slide. You need to find out the original cost, original net book value, and then compare the transfer price. So you need to do it yourself. So original cost from the question is 200,000, and then for the accumulated depreciation, because at the beginning when the holding company purchased it, it assumed that it can be used for 10 years, and then after it used for 4.5 years, it decided to transfer. So the net book value at the date of transfer, 1st of July 2005, it should be 110,000. Compare with the transfer price, the profit on sales is 10,000, right? So you get this correct, 10,000 in the transfer of the fixed asset. So next, you need to think about how to reverse the entry, right? How to reverse the entry. So let me teach you how to reverse the entry. You need to think about the original. You need to think about the original, and then you find out the net difference, and then you prepare on that. So let me show you. So in parent's book, when it sells the equipment, it will debit cash, debit accumulated depreciation, credit equipment, and then credit profit on sales. This is the original entry done by the parent company. And for the subsidiaries, they will debit equipment and then credit cash because they buy it. So in this case, cash and cash will be eliminated. And the equipment will also be eliminated. So debit is 120, credit is 200. Therefore, after you eliminate, we still have credit equipment of 18,000. and accumulated depreciation, and also profit on sales. So what we need to do is to reverse this three entry. Finally, reverse the whole transaction. How to reverse it? For accumulated depreciation, originally it is debit, we will credit. For profit, originally it is debit, we will credit. For the equipment, we still have credit in the equipment for 80,000, then we will debit. So finally, CJE number 1 will be debit equipment, debit profit, and then credit accumulated depreciation. So always bear in mind, for profit, how you will reverse it instead of credit, because credit is for profit usually, then you need to debit. Accumulated depreciation, you need to credit to make it reverse, make it become the depreciation. And then because originally they have removed the accumulated depreciation, now you need to introduce the accumulated depreciation, so it is credit. And then equipment will be the remaining figure. Equipment will be the remaining figures. You can do it in this way. Okay, so please check whether you do this correct or not. Whether you do this correct or not. So you can call it reverse of profit on sales, reverse of profit on sales, or you can follow here adjustment of unrealized profit. So whatever explanation we are accepted, once you can already show me why you need to do this entry. And for the subsidiaries, when it purchased the equipment, it will do the depreciation. So it will based on the transfer price divided by the remaining useful life. Because for the subsidiaries, when it purchase it, they will based on the depreciation. They will use the transfer price to divide the remaining useful life, because they purchase in at 120 and then 1,000, and then the remaining useful life is 7 years, and then they will do this depreciation. But don't forget, they purchase it in the mid of the year. Therefore, when the subsidiaries prepare the depreciation, they will calculate it based on 6-month depreciation. Excuse me. Okay, sorry for that. So here in the subsidiaries book, it will prepare the depreciation, and then the depreciation will be debit depreciation 120,000 and then divided by 7 years, because it is the transfer price divided by the remaining useful life, and then it will times 6 months because it is purchased in the mid of the year. So they will do that. However, for us, when we calculate the depreciation, we will ignore what you have done. We are using the shortcut. We will base on the profit on sales divided by the remaining useful life. Therefore, the second journal entry is 714. How to calculate it? So the profit, it is 10,000. And then it is divided by the remaining useful life. Remaining useful life is 7 years. And always remember, we need to reverse only half year's depreciation, that is 6 months. Therefore, it should be times 6 months. If you are able to calculate it correctly, then it implies that you really look very clear for the question, because it happened in the mid of the year. Therefore, you need to calculate half year's depreciation to do that. Okay, good try for you. So if you have calculated it wrongly, don't give up. You need to know why you do it wrong and which figures you have mixed up. And if you have any questions, you can ask me. Okay, so this is CJE 1 and 2. And then for CJE 3, let me show you immediately, because it is a downstream transfer. So nothing will hit the subsidiaries. Therefore, based on the questions, it gives you the subsidiaries profit, and then you use the profit 500,000 and then share to that. Okay, any questions on this part? And then we will do the second part immediately, because it is not that difficult. Okay, any questions on this part 1, when it is a downstream sales? So how about if the situation is changed? Assume that all the figures remain the same, but this time we make it become upstream sales. So this is requirement number 2. If the situation had been reversed, and then now it's the subsidiaries company that show the equipment to the parent, that we'll call it the upstream sales, and then it asks you to prepare the consolidated journal entry. So let me show you. CJE 1 and 2 will be exactly the same. Because whatever it is upstream and downstream, the entry will be the same. But for CJE number 3, it will be different. For CJE number 3 will be different. So I give you 2 minutes for you to calculate and then prepare CJE 3, because this time it is a upstream sales. So think about how it will affect the profits of the subsidiaries and then share to the NCI. So I give you 2 minutes for you to prepare CJE 3. Okay, can you show me the CJE number 3? What is the amount of NCI share of current year profits for this upstream transfer of fixed assets? 你計到幾多呢？ CJE number 3， 你要 transfer 要 share 幾多 profit 俾 NCI？ CJE number 3, what is your amount? Can you give me your figures? So you need to think about whether CJE number 1 and number 2 will hit the profit of the NCI or not. Once it will hit the profits of the subsidiaries, as well as the NCI's profit will be affected. So what is the amount shared to NCI? Very good, $49,071. So first of all, you need to reverse the profit, right? Because you cannot earn this profit. Remember the difference between transfer of inventory and transfer of fixed asset. For transfer of inventory, once the goods is being sold to the outside third party, it becomes realized. However, for the transfer of fixed asset, we cannot sell it to outside third party and then indicate that it is realized. How should it be realized? Once the party who purchased the fixed asset used the fixed asset and then they introduce depreciation, then it will imply that you realize it. Therefore, the treatment will fall on to who transfer to whom. In this case, it is upstream. So subsidiaries transfer to the holding company. First of all, it will reverse all the profit. But as the time passed by, the profit will be put it back into the income statement and then realized through depreciation. Therefore, originally profit is 500,000, and then we reverse the profit, CJE number 1, we reverse the whole profit, and then as the time passed by, it will realization free depreciation. So here we will add back $700 and $14. Then it become adjusted profit, and this adjusted profit 10% is shared to the NCI. Finally, we will debit income to NCI and then credit NCI. Okay, understand it clearly. We will firstly reverse all the profits, and then as the time pass by, realization through depreciation. So the term is called realization through depreciation. Although when we write it, we just say that it is the adjust of excess depreciation. But when we put into the income statement to think about actually what does it mean, it represents realization through depreciation. Okay, see if you have any questions. If no, we will stop here and then take a 10 minutes break. After 10 minutes, and then we will go through the last question, problem 5.5. Okay, so 10 minutes from now. Okay, so let's come back and then we will finish the last question for today. That is problem 5.5. So let's have a look. So 5.5 is not that tricky. So let's have a look together. So problem 5.5, first of all, it gives you the financial statement of P company and Y company for the year ended 31st of December 2005. And then it told you that P company acquired 90% of the interest of Y on 1st of January at 2003. So immediately I write it down. 2003 and 2004 is prior years, and then 2005 is current year. So here we have 3 years total. And then it gives you the income statement. So let's look at the income statement. So here it gives you the income statement, and then the first line will be profit before tax. So if the question, they want to simplify it, and then they do not give you the details about sales, cost of goods sold, gross profit, other income and expenses, and then it immediately give you the first line is profit before tax. That means all the expenses is included here. For example, if you find that there is depreciation, there is goodwill impairment, there is dividend income, all will appear in this line. Therefore, when you come across on that, you need to prepare the consolidated journal entry and put full all the expenses item and income item on the same line of the profit before tax. 咁有陣時為咗簡化咧，題目可能咧就唔係由 sales 俾你，佢第一行拉俾你咧就已經係個 profit before tax 嘅。咁如果係 profit before tax 咧，咁即係話咧所有嘢收晒喺呢一行入邊啦，包括所有 expenses 啦、所有 depreciation 啦、impairment 啦、other income， 譬如 dividend income 咧都係會擺晒喺呢條 line 入邊。咁如果係擺晒呢條 line 入邊咧，當你做 console adjustment 嘅時候咧，你就會喺呢個 column console adjustment 咧，全部塞晒落 profit before tax 就得啦。咁所以 profit before tax 下邊可能就要留幾條線咁嘅空間，咁你去做翻就可以啦。咁所以咧亦都包埋 dividend income 喺度。Therefore, the dividend income is included here. If they give you the normal income statement, start with sales, purchase, cost of goods sold, you need to follow the normal practice to do that. Okay? 如果係正常俾 sales, cost of goods sold。other income 嗰啲你就正常咁做，否則的話咧你就將所有嘅使費收晒喺呢行入邊啦。So you will highlight the dividend income. It will include in these figures and also the dividend declare, and also we will have the retained profit at the beginning of the current year, and this will highlight the profit after tax. So don't mix up profit retained. You need to find it out the profit after tax. It is 720,000 here. Let's continue. It gives you about the purchase considerations. And then let's move on. So it gives you additional information. The additional information is the date of acquisition. It gives you about the share capital and also the retained earning. And then it gives you the total equity. So bear in mind, total equity is also equal to net asset. So this is the amount of book value. At book value, it is 1.1 million. And then for the fair value and book value, they told you that you can see that the book value is 1.1 million, same as here. And out of that, there is fair value difference. And the fair value difference is for on the inventory. And for the inventory, you can find that there is a fair value difference of 50,000. When you compare the book value 200,000 with the fair value 250,000, there is a fair value difference of 50,000. Okay, let's continue. They give you about the fair value of NCI. This time, you do not need to calculate yourself. Instead, they give you the figures, 140,000. Next, additional information. So we have two additional information. One additional information is regarding the fair value difference. So now it is 2005. Date of acquisition is 2003. And for the fair value difference, it says that this undervalued inventory finally is being sold to the third party in 2004. Now it's 2005. When you prepare the entry, you need to think about what is the journal entry in 2004. And then in 2005, you need to re-and-add. When you re-and-add, what will be the amount? So I let you to think it about that later on. So this is the undervalued inventory being sold in last year. And then part B, additional information. Y company transfer its fixed asset to P. This is a upstream transfer on 1st of January 2005. You should know how to handle this because we have already come across one of the questions before the break, right? So this time it gives you all the details. It told you about the profit of the sales recorded by the Y company. It is 80,000. And then the original useful life is 5 years. And then after that, after the transfer, the remaining useful life is 2 years. So this time they give you the details about the profit. Okay, so we can ignore the tax effect. And for this question, actually it has 5 requirements. Let me show you one by one. First requirement, prepare the consolidated adjusting entry for the year ended 31st of December 2005. We will do that. Requirement number 5, prepare the consolidation worksheet. So I have uploaded the consolidation worksheet for part 5.3 and also 5.4. So for 5.3, I have already prepared the console entry together with you. And then for the working consolidation worksheet, I left it for you to practice it yourself. And also for 5.5, I will give you all the console journal entry, and I also let you prepare the consolidation worksheet yourself. So promise me you will actually prepare the consolidation worksheet yourself, because if you do not prepare it once, you will never know what kind of difficulty you will come across. In the coming test at the end of the March, we will also give you questions like this way, and then you need to prepare the consolidation worksheet. Don't give yourself the first chance to prepare the consolidation worksheet is exactly on the test day. If you really do that, you will come across a lot of difficulty, because if you do not have a chance to prepare, you never know what kind of difficulty you will come across. So please promise me to prepare the consolidation worksheet. Practice at least one before you take up the test. 咁個 consolidation worksheet 5.3同5.5咧擺咗上 Moodle 啦。咁你要應承我，你真係要落手落腳自己去砌一次個 consolidation worksheet， 唔好喺測驗先至係第一次做 consolidation worksheet， 咁樣你會後悔㗎。因為 consolidation worksheet 咧，你唔好以為我做晒 CJE 1至7之後咧，我係一定能夠巴到條數。好多時都係 balance 唔到啦，但係比較奇怪啦，你擠晒落去點解 balance 唔到咧？你真係要試嘅。咁 answer 咧，我今個禮拜稍後咧就會擺上網。咁擺上網嘅 answer 咧就係嗰個叫做書商嘅 answer。咁書商嘅 answer 咧，同我 given 俾你嘅 CJE 咧，基本上係一樣，除咗個 number 唔同。因為我而家上堂教你嘅 CJE number 咧，我好多時教你諗完1點樣諗2、3啦，然後最尾把關嗰3條就一定係關於 NCI， 所以我教咗你一定嘅 sequence， 你就唔會做漏啦。但係書商嗰個咧，就冇一個固定嘅 sequence 去做嘅，咁所以今個禮拜我會先俾個 answer 你睇咗先，然後下個禮拜上堂我會喺堂上面咧將我嘅 version of 個 working worksheet 個 consolidation worksheet 俾你，咁嗰個我嘅 version 咧就會跟足翻我啲 CJE number 嘅，咁你可以 compare 下，咁但係你一定要落手落腳試做一次，如果唔係你唔會知道自己遇到咩難題 consol 完咗你係 balance 唔到㗎，咁請你記住自己要去做一次啦。And then for the requirement number 2, because it is prepared the analytical check, therefore we do not need you to do so. You can ignore it. How about part 4? Part 4, it also asks you to prepare the analytical check on console retained earning. We also do not require you in our test in our examination. Therefore, we do not ask you to do so. But for requirement number 3, what does it mean? It says that usually we calculate the NCI as fair value, right? But this question asks you to calculate NCI as a proportionate share. In reality, nowadays, when you get practice in outside, usually NCI is at fair value. We seldom use proportionate share of the net asset to calculate the NCI because it is easier to find out the fair value. Since our test and our examination focus on fair value of NCI rather than calculate it proportionately, therefore we do not require you to prepare the requirement number 3. Okay, now let's start with the console adjustment first. So first of all, I will give you 5 minutes for you to prepare CJE1, calculate the goodwill, and also CJE2. CJE2 is to handle the fair value difference of inventory because this question, we do not have goodwill impairment. Okay, so please calculate goodwill. 1 and also CJE2. And CJE2 is for the fair value difference in the inventory. So 5 minutes for you to prepare 2 entry. Yep. CJE1 and 2. CJE1 is for the normal, as we talk about the goodwill. And then CJE2 is for fair value difference in inventory. Okay, so 5 minutes from now. Okay, can I have the figures of your goodwill? So what is the amount of goodwill for CJE number 1? Can you show me the goodwill? What is the amount of goodwill for this question? Goodwill, 190,000. Very good, it is correct. So this question is not tricky, right? So you can directly find out the goodwill here. Thank you very much for your help. So consideration transfer is 1.2 million. Fair value of the NCI given by the question is 140,000. Altogether is 1.34 million. And then when you calculate the fair value of the identified net assets, you can find it from the question, 1.15 million. Finally, goodwill is 119,000. Very good. So you will prepare the first entry, that is to eliminate the investment in Y company and then re-add again in current year, right? So you just write something like that. So you will debit share capital, debit opening retained earnings, debit inventory, debit goodwill, and then credit investment in Y company, and also credit the NCI. Okay, remember, this is the third year. This is the third year after you purchase the company. So you purchase it at 2003, now it's 2005. So for this entry, it is re and add. So this is re and add here. Okay, very good. You can do it. And then the second journal entry usually will be focused on the goodwill. So the question do not have any goodwill impairment. So next we will move to the inventory. So what will be the CJE number 2? Can you show me your CJE number 2? Which entry to be debit and which entry to be credit? Can you let me have your answer on this part? Which entry to be debit? Which entry to be credit? Any ideas? Can you show me how to do that? Actually, you have learned this already when we come across this in chapter 4. So what will be the CJE number 2? Which entry to debit and how much amount? Which entry to credit and how much is the amount? Can you show me your journal entry for CJE 2? Anyone can help? Can I have the console entry for CJE number 2? No, so let me show you. So remember, now the inventory is increased in value. So think about the subsidiaries. When the subsidiaries sell the goods, sell the inventory in 2004, what should the subsidiaries do? So in 2004, when the inventory is being sold, actually, you already know how to do that. You can refer to problem 4.3, CJE number 4. We have come across on that before. So when the subsidiaries sold the inventory, they will view it in book value. If go back to the question, book value is 200,000. So therefore, when they sell the inventory, they will debit cost of goods sold, credit inventory for 200,000. However, from the angle of the holding company, you need to debit cost of goods sold, 250,000. Credit inventory, 250,000. Therefore, the difference is 50,000. So from the group angle, you should debit more on the cost of goods sold for 50,000. Credit more on the inventory of 50,000. So when they show it, we would need to do more on that. We need to handle 50,000 more. So in 2004, our console journal entry will be debit cost of goods sold 50,000 and then credit inventory 50,000. Now it's 2005. You need to re-add what you have done in 2004. Instead of debit cost of goods sold, you're no longer able to debit cost of goods sold because the income statement is being closed. Therefore, what you need to do is to debit opening retained earnings and debit NCI and also credit inventory for this 50,000. So remember, this is called sales of undervalued inventory for 2004 that is shown in last year. In last year, you have already prepared this entry. Therefore, now in current year, what you need to do is to re-add. When you re-add, you need to debit opening retained earnings, debit NCI, and then credit inventory. So if you don't know how to do that, please copy it now. Okay, see if you have any questions regarding this CJE1 and CJE2. So always remember how to handle CJE2 because we have already come across in chapter 4 already. Okay, next I will give you another 5 minutes for you to prepare CJE3 and CJE4. So what are they? CJE3 and CJE4 related to upstream transfer of fixed asset. There is a transfer of fixed asset, so you need to think about 2 entries. One is how to reverse the profit on sales. Second, how to handle the excess depreciation. So another 5 minutes for you to handle CJE3 and 4 now. Okay, so let's check the CJE number 3. So for CJE number 3, it is to reverse the profit. So you do not need to calculate the profit because the questions is already provide you the profit. So let's have a look. So usually I will write down the original entry and then think about what is the adjusting entry. In Wise book, when it sell the equipment, it will credit equipment 100,000 and then it will debit accumulated depreciation. In return, it will get a debit cash, and then credit profit on sales. And in Peace book, when it acquired the equipment, it will debit equipment and then credit cash. Therefore, cash and cash will be eliminated, and then accumulated depreciation will remain here, profit will remain here, and then the equipment, credit and debit. When you compare it, credit is 100,000 while debit is 120,000. After you do the elimination, it will still have debit equipment 20,000. So what you need to do is to reverse the accumulated depreciation, to reverse the profit, and also reverse the equipment. Therefore, the entry here, we will credit accumulated depreciation, debit profit, and also credit the equipment. Therefore, I will let you know the answer here. So you will, for CJE number 3, you will debit profit on sale, credit equipment, credit accumulated depreciation. Actually, you always remember when you want to reverse the profit, it should be debit. When you want to reinstate the accumulated depreciation, it will be credit. And then equipment can be the remaining figures. Equipment can be the remaining figures, or you can just follow my teaching before. You need to think about the original entry and then you do some elimination. And then for the adjustment of the excess depreciation, just simple, follow here. It should be the profit on sales divided by the remaining useful life. So the profit on sales, according to the question, is 80,000 and then divided by the remaining years, that is 2 years. So finally, CJE4 will be debit accumulated depreciation and then credit depreciation. Okay, any questions on this CJE3 and CJE4 here? So once you've done that, let me give you another angle to think about how to prepare this entry. So apart from write up all the entry here and then do the elimination, actually there is another way that helps you to understand. If you find that it is useful, you can follow. So you can write before. Before any transfer, the fixed assets original cost is 100,000, and then the accumulated depreciation is 60,000. Therefore, the net book value is 40,000 per the question. After transfer, before any depreciation, the fixed cost transferred to the holding company, they will treat it that the cost is 120,000 at the beginning and no accumulated depreciation at the beginning at that time. And then we need to make the adjustment. Adjustment, that means make everything back to before. So when you compare the fixed assets, originally it is 100,000, now it increased to 120,000. Therefore, you need to minus 20,000 for the equipment. Thus, you will credit equipment for 20,000 to make it decrease in value. For the accumulated depreciation, originally it is negative 60,000 and then now becomes 0. You need to make it become negative 60,000. So we call negative, that means we need to credit accumulated depreciation. So you will do it. For the net book value, originally it is 40,000. Now after the transfer, it become 120,000. It have increased 80,000. So you need to reverse the profit. This increase represents the profit. So you can also use this vertical format to find out the difference and then think about the transaction. Another easiest way is profit will be debit, accumulated depreciation will be credit, and then the remaining will be the equipment. 咁有唔同嘅方法去處理呢條 entry 嘅，你可以跟翻最基本啦，諗翻晒成件事點樣發生，然後 reverse 剩低嗰啲。你亦都可以選擇做之前之後，然後將佢變身還原翻。最後最簡單嘅就係你知道 profit on sales 一定係 debit，accumulated depreciation 一定係 credit。你計到 profit 係幾多，你亦都知道將個 accumulated depreciation 還原翻幾多。咁 equipment 呢個就係一個 balancing figures。咁有時會係 debit，有時會係 credit。Okay, so you have several ways to find this entry. So just make a reference on that and then see which method you prefer. You can use it yourself. And finally, the adjustment of the accumulated depreciation on that. Okay, so this will be CJE 3 and 4. Finally, the last entry will be CJE 5, 6, and 7. So what will be CJE 5 to CJE 7? Again, this will be the NCI adjustment. One is to find out the amount or the NCI share of the opening retained profit. And then second will be reverse of the dividends. Third will be calculate how much profit of current year's profit to be shared to NCI. So another 5 minutes for you to prepare CJE 5, 6, and 7. Okay, so let's check the CJE number 5. It is NCI share of post-acquisition retained earnings to the beginning of the year. So again, you can find the information from the acquisition day and also from the income statement at the beginning of current year, the retained profits. And then you do some calculation, share 10% to the NCI. Finally, you will debit opening retained earnings and then credit NCI. The amount is 20,000. And for elimination of the dividends, so since the question gives you the dividend declare, they do not give you the dividend income. So you may need to calculate the dividend income yourself. So out of the 140,000, 90% that is the dividend income paid to the holding company. And then the remaining 10% is paid to the NCI. So in this case, you need to calculate the dividend income yourself because it is included in the line of profit after tax. So finally, my last questions for this problem 5.5 is CJE7. When you calculate the NCI share of current year profits, what is the amount? Can you give me the figures? I just want the figures for CJE number 7. NCI share of current year profits after tax to them. What is the amount? 68,000. Thank you very much. Thank you very much. It is correct. So basically, 5 and 6, we do not have any entry that will hit the P&L, right? And then go back to CJE1. Again, this will not hit the P&L. And then for CJE2, this is to re-add what we have done. So it is also will not affect the subsidiaries' profit. And then for here, we have the upstream transfer. For upstream transfer, same as the previous questions we have done in 5.5, part 2, we need to reverse the profit and then we need to realize the profit through depreciation. So CJE 3 and 4 we will input here. So how to do that? Let's have a look. Profit after tax from the question is 720,000, and then we need to minus the unrealized profit on sale of the fixed assets according to CJE number 3, and then we need to add the realization through depreciation. As mentioned before, unrealized profit will be realized once the buyers use the asset. So finally, it will reverse it for the remaining useful life. Remember, the remaining useful life is 2 years. So 80,000 of the profit will be reversed in this year and coming year. One in current year is 40,000 and then another 40,000 in next year. Finally, the CJE number 7 will be debit income to NCI and then credit NCI. So remember to practice the consolidation worksheet because you need to know how to prepare the consolidated journal entry. It doesn't mean that you actually know how to do all the things. So you need to bear in mind for how to prepare the consolidated journal entry. Okay, so see if you have any questions regarding today's question. If yes, you can stay behind. And then one thing I would like to remind you is at the end of this month, we will have a midterm test. And then remember for the midterm test, you only allow to submit one PDF file that less than 20 MB onto the Moodle. Otherwise, Moodle will not accept Greek file. I forget that whether I have teach you how to convert your JPEG file into PDF or not. So let me demonstrate one more time to you. So if you have some PDF file, you go to Google's and then you just type PDF and then 2 and then jpg.com. Then you can come to a website that help you to convert the JPEG to be PDF. Okay, let me do it again. So JPG to PDF. And then you search it, it should be jpg to pdf.com, and then you upload the file. So you can upload the page you have already take a photo. Okay, sorry. And then you upload another page too. So, and then you upload another one. So assume that I have several pages. And then finally, after you upload it, you click combine. Once you combine it, it will immediately convert into a PDF file. And then for the PDF file, remember to check whether you have covered the whole page or not. Sometimes you may cut some of the answer here and then see whether it is seeing clearly or not, and then save it as PDF. And if you generate in this way, actually the PDF file will not more than 20 meg, then you can upload to Moodle。咁呢個係一個快捷嘅方法去 upload 翻同埋去 convert 啦。咁你可以嘗試下咁樣做嘅。咁answer book we have already provided in Moodle. If you are able to download it and then print it out, that will be fine. Or otherwise, if you do not have any printer at home, you can use the single line paper and then prepare a cover. And then you can write on the single line papers. And bear in mind, for our midterm text, actually we have a consolidation worksheet attached in the question book. So what you need to do is to download the question book as well as the consolidation worksheet. You can use the consolidation worksheet provided in the question book and then write down all your console adjustment, and then you can submit the consolidation worksheet as part of your answer. If you do not have the printer to print it out, then sorry for that. You may need to copy the consolidation worksheet out yourself. Therefore, you need to well prepare for that before your midterm test. So see if you have any questions for today and any further information. Remember, for this module, we will have one test and also one assignment. And the group assignment, the group list, and also the assigned questions I have already sent to you around the Lunar New Year holiday. I have already sent to you and also upload it onto Moodle, so you can find from the Moodle. Remember, this month end, you need to submit the midterm test. Next month end, you need to submit your group work as a group essay assignment. And there are two parts for you to do that before the examination. So see if you have any questions. If no questions, we will continue to have the MS Team class just like this week until further email from the university. See whether they will resume the face-to-face or not. Otherwise, we will continue to use the MS Team to conduct our class. Okay, so if no questions, remember to do the consolidation worksheet. And then one student have asked me that I have already give you the exercise 4.4, but this 4.4 is an extra question. Therefore, I do not upload the answer on Moodle. Now I upload here, and then you can find the answer for this 4.4, and you can also check it now. Okay, so if you have any questions, you can stay behind and then ask me. If no, see you next week.